My brother played for a while, about 4 or 5 years, and played a little bit collegiate. And then some of my friends, made it on college scholarships and stuff like that.
Nice. That's super awesome. All right, video or in-person meetings?
Hmm.
Ooh, do
Do
you
you
know
know
that's a
what?
tough one?
Go on, Ash.
Well, no, because Frank, you're an in-person person. I know you too well. But web meetings are like they unlock so much more. You can talk to so many different people. So I'd go web over in person.
Yeah, I
Yeah,
agree with
another
that now. I much prefer in-person meetings. I think you can get better reads on people. There's more that can be done. There's a level of trust there. But I will say that over COVID and everything, remote meetings have made life easier and they're more convenient. But it just means that you are stuck to your computer all day rather than. Yeah, but I think probably remote then.
Okay,
Yeah, I mean,
yeah,
I would agree with that side. You can read people a lot more in person, but the perk of a web meeting is it shoulders up.
yeah, that's true. It's interesting. The community is 1 to 8 in favor of in-person meetings. That's interesting.
It depends what you're discussing too, I guess, and what industry, right? Sometimes you can't beat personal contact, but I think for the most part, remote will suffice.
Yeah, yeah, I would agree there. Would you rather have an angry client or an angry coworker?
Mm. Co-worker.
I agree.
Yeah,
Coworker, I would
co-worker.
say.
All right. Yeah, I feel like that'd be an easier dispute to settle than a angry client. Let's see. Would you rather go back to age 5 with everything you know now, or know everything your future self would learn now?
Know everything my future self would learn.
Really? Okay.
I think I'd rather go back with the knowledge I have now.
Gotcha. Not a single person in the community said know the future information. That's interesting. Yeah,
You
I
got to
think
value what's around you now.
say that again.
You have to value what's around you now.
That's true. Yeah, it is very important to recognize value around you now. True. Interesting perspectives. I think these questions are really fun because you get to hear the different dynamic between the project leads and the community, and some of them are synergistic and others are a little different just because of perspectives on life. So it's definitely interesting to hear.
Well, see, if I knew what I knew now when I was 5, then I would have thousands and thousands of bitcoins right now.
Yeah, that's true.
Yeah.
That's true.
But you wouldn't go to school either.
That is
I'll
also
just
true.
become the most prominent futures trader. I just trade. If I know the price, I just leverage every trade.
That is true. That's funny. Are you a more logical or emotional person?
Logical.
Logical.
Yeah, logical, I would say. My wife tells me I have no emotions.
Yeah, I'm right there with you. I'm pretty dull when it comes to that, but I think that helps you make more concise decisions, especially from a business standpoint. If you can leave emotions out of it, and investing and trading standpoint, like emotions will get the best of you if you're, especially like day traders. If you put emotion into that, then good luck.
Yeah.
Yeah, I like the logical side of things. I mean, I don't like to just know a right answer, but I like to know why that answer is right. So, yeah, my wife always tells me that. Why are you so technical on things? Why do you always have to think about things logically? It's just kind of how my brain works.
Yeah, yeah, definitely. People are very different than each other for sure. See, would you rather get $100,000 per year for the rest of your life, or have $5 million up front?
5 million up front.
Yeah.
Even though the $100,000 is more money over probably lifetime value, I think you can make more impact with the money up front immediately.
Okay, that's true. That's true. Depends if you invest it wisely and what you do with it. But yeah, the community voted a vast majority for the $100,000 per year. So that's interesting.
I think that's more on the security side, but yeah, I think I would agree with that. Um, I was kind of making that joke with my wife. We bought lottery tickets for the California lottery just because it was one of the highest Powerballs ever. And so we just, threw a little bit in and kind of just made a joke of it. And it's like, would you take the lump sum or would you take the long-term payout? And for me personally, I feel like I would be able to utilize it better if I was to take the lump sum, because another thing people have to think of is the inflation. Your $100,000 in 20 years isn't going to hold the same value as your $100,000 is now.
That's true. That's very true. Definitely a lot to think of. It's not a straightforward answer for sure. Just a few more questions left. Are you guys morning birds or night owls?
Night
Morning.
owl.
Yeah, I'm a night owl.
Okay. Yeah, I'm right there with you. I hate getting up in the morning. I probably woke up at like I think 9 a.m. today.
Yeah, Frank's the early bird. He gets up like 5:30, 6 a.m.
I
Yeah,
would not be able to do that.
this time of year, probably a bit earlier than that. It gets light really early. So yeah, first light normally.
Interesting. Would you rather swim in a lake or the ocean?
Lake. I hate sharks.
No preference
I'd
really.
sea. Yeah, I'd rather the sea than the. I don't have sharks here.
Okay. Interesting. Last question. Would you rather never need to sleep again or never have to work again?
Sleep.
I'd say never sleep again.
Nah, that'd drive me crazy being awake all the time. When everyone
Yeah,
else is
but
asleep, you'd be bored.
would you feel relaxed? That's the question. So if if you don't feel tired, then you could just get double the amount done.
This is out there as an AMA. I haven't even thought about these things before.
Yeah, it's definitely interesting. I find these questions fun to ask because you get some interesting perspectives on the people that we're chatting with before kind of dive into what you guys are really about and the protocol itself. And I think it gives a
Yeah.
good uh, fundamental understanding. It sets the stage a little bit before we talk about it. But yeah, with that being said, let's dive right into it. So I'm curious to hear about your guys' background and why you guys started Kyoto Protocol.
Okay, so I'll start and pass over. So I've loved cryptocurrency since I stumbled across it. I invested in 2016. I done well in 2017, and then subsequently went full time in 2018 into crypto. Kind of a bad year to do it. But I've had multiple businesses within the space, from Bitcoin ATM networks to OTC, selling Bitcoins in large block orders. I helped kind of build a network up, which is where I stumbled across Frank. And what led me to, kind of looking for a protocol to make a legacy project was that, I strongly believe that DeFi is kind of the new age of finance. I think it's going to grow exponentially over the next few years. And I come from a centralized kind of fintech background, which was heavily regulated, and it kind of pushed out people like myself, made it too difficult to run a business. And I think DeFi is kind of where I want to be. So yeah, I met Frank along that journey, selling him coins. And yeah, Frank, I'll let you introduce yourself.
Yeah, hi. I'm Frank, COO. I'm an entrepreneur and investor. Bought my first Bitcoin 2017. Quickly became a crypto enthusiast. Some of my business has been, my shortly after I started to look and redraft how I wanted to invest, looked into sustainability, ESG based projects. So I had an interest in this, regenerative agriculture. Ash and I got involved in crypto, like he said, worked together very closely. He sold me blocks of Bitcoin about 4 years ago. Got moved into DeFi very, very quickly, had that aha moment. I think it was I can't remember which protocol, but I was seeing like 10% returns a day. And as an entrepreneur, it just clicked. I thought it was, was going to be life changing for a lot of people. Doubled down on that, and then taking the two now with crypto, DeFi, and looking into ESG based projects, looking at sustainably focused investments, blending the two to form regenerative finance, which is what Ash and I are involved in now. Just seemed like the logical step, and that's really how I became involved in Kyoto.
All right. And I'm Ken. I'm the community manager. I come from a stock trading background, and then I worked my way into crypto roughly a year and a half ago or so. I've worked in the space for a little over a year doing marketing, brand ambassadorships, community management, things like that.
Got it. Yeah. So how did you guys all like meet together and then start Kyoto Protocol? Like, where did that idea come from? And then I guess as you're talking about that, then transition a little bit into what exactly Kyoto is.
So the whole team of Kyoto, we kind of met through mutual connections. Frank and I invested into protocols that Ken was working with. We kind of talent scouted Ken, so that's how we kind of aligned with Ken. In terms of the journey of Kyoto Protocol, it's really an alignment of passions to with all of the team. So my interest is kind of like hiking, preservation, mycelia, mycology. And when I was looking at kind of making a difference, utilizing DeFi, we researched Kyoto Protocol, which was basically the first legislation to acknowledge climate change, but also create emissions trading. Now, that ties into kind of what Kyoto Protocol is. It's an optimized product stack built on the blockchain, on our own blockchain, to support and enhance the carbon credit industry, whilst also assisting the regenerative finance sector to scale. I think I've kind of covered a question too far there, but yeah. So in terms of like how Kyoto started and how it was aligned, it was a passion of myself, and then I kind of built it out with the core team to try and make a positive impact with a blockchain solution.
Gotcha. Yeah, you guys have quite a bit going on, creating your own blockchain. I mean, that's something that not many people try to do. So definitely a lot to talk about. As far as carbon credits themselves, like for everybody listening in the audience, like what is a carbon credit? What and then what is like the problem that you guys are trying to solve or improve with bringing those on the blockchain?
Yeah, so carbon credits are effectively a data metric that governments use, which was obviously created from the Kyoto Protocol originally, to measure the input and output of carbon emissions. Now, the market is massive. It grew to $856 billion last year. It was a 164% increase on growth. Not many people have actually heard about carbon credits as well. It's 3 times the size of Samsung's market cap, but not many people have actually ever bought or held or understood what a carbon credit is. So to simplify it, it's 1 ton of carbon emissions that is basically been counted from a clean project to give an offset to a business that creates 1 ton's worth of damage, and it's really just a receipt tool to acknowledge carbon offset. So if a business creates damage, it will have to utilize carbon credits to offset its damages. The issue with the carbon credit market right now is that it's so fragmented. There's 170 types of different carbon credits. There's 2 different market types: voluntary and compliance. So it's everywhere at the moment, and what we're trying to do is bring it all into one understandable place on the Kyoto blockchain. So I hope that kind of answers your question in terms of what a carbon credit is.
Yeah, definitely. And then what's the advantage to bringing them on chain versus what solutions are out there right now?
So if you bring them on chain, some other projects are already doing it. There's kind of like a gold rush to bring carbon credits on chain. But the issue is a lot of these projects are building carbon credit products on layer ones, layer twos that are not really optimized or set up to verify or even home these type of transactions. So what we're doing and the benefit of it is by creating a tool stack that allows businesses to passively generate a yield that goes towards their carbon emission offset. So they're passively generating their offset at little to no cost, but also doing that on a blockchain that completely mitigates offset fraud, which is, one of the largest issues in carbon offset in general. Because carbon credits are so hard to track and monitor, and it's really to a closed ecosystem, the fraud is quite high, and that will continue, if not grow, much quicker as people come on to, jumping on the gold rush of bringing carbon on chain. We strongly believe that carbon credits are going to be one of the largest commodities on the blockchain. And, the Kyoto Protocol blockchain and ecosystem itself heavily utilizes carbon credits.
Gotcha. So through building your own L1, you're kind of structuring yourselves in a way that allows you to essentially bring those carbon credits on chain better than any other of the projects or products out there currently, just because utilizing your own blockchain, you have different things that you can control yourselves, like different variables that are much more controllable just because it's your own blockchain rather than building on somebody else's. Is that kind of your angle on it?
Yeah. So, and it's also, go ahead, Frank.
Yeah, it's that's pretty much it. But in addition to that, it's the layer one isn't just about us and carbon credits. There's regenerative finance, which, sorry, did I cut out there? Yeah, someone's calling me. So yeah, the layer one, if you look at DeFi or specifically crypto and DeFi, within that now there's a new subsector of regenerative finance. Okay, and if you look at this like a roll up or an acquisition strategy, most of those different refi projects at the moment are on different chains. There's some on HBAR, some on Near, some on Polygon, some on BSC like us. What we're essentially doing is taking it one step further. What makes these projects special is a percentage of the taxes or the reflections based on whether it's GameFi, NFTs, or a decentralized finance application. What makes it refi is taking a percentage of those tokenomics or fees or reflections and giving a portion of those to help tackle climate change, promote biodiversity, or just to give something back to the planet. What we're looking to do in creating our layer one is not only to have, like, as the jewel in the crown, our key carbon credit marketplace, which leverages DeFi, decentralized finance, to provide carbon credits as a stable, as a passive income or return from staking. We're actually encouraging all of these fragmented refi projects to build on our chain. And by giving our TX transactions or our gas fees, further taking a percentage of those and using it towards a regenerative channel, right? So by getting people with a likewise a shared vision of, look, let's use these tool sets that are reshaping the financial system. It's esoteric in nature. Small group of people at the moment understand decentralized finance. They're harnessing it, and we're getting good returns. But it's very, very small. Well, people are leveraging this technology, these smart contracts, to ultimately move forward and tackle bigger issues, ecological issues. And we want to be at the forefront of that. At the moment, the carbon credit market is primed to explode in the next 18 months, certainly in the next 10 years. By building this layer one, by getting some of these projects that share our vision, doesn't matter what you're interested in, if you can leverage these tools to help tackle climate change, to help promote biodiversity, to do better for the planet, we're giving them a home. And I think that this is a very niche subsector within crypto and DeFi that's emerging, and that's what we want to build. So yes, we're going to have this very, very exciting carbon credit marketplace that we're building from the ground up, and we're going to bring synthetic carbon credits on chain, which is bullish because I think it will give people an opportunity to buy an appreciating asset on the blockchain, on a DEX, but also by building our layer one and sitting in the middle with our main marketplace there, we're also building the home of refi, which is a growth market. And I believe that we're doing this at exactly the right time. Currently, nobody else in refi is doing that. They're building their own protocols on other layer ones and layer twos, as Ash said. But we're going to be the first people to build a layer one with that specific purpose, where gas fees contribute further. So it's about a shared vision and building something collectively to help solve broader problems.
Gotcha. No, there's a lot to unpack here, and I like it. I like it. Like the whole concept behind making your own blockchain to have a shared vision with other projects in the space. And speaking of those projects, is there like a vetting process on different projects that launch on the chain to make sure that they do subscribe to the refi model, or how is that going to look?
Yeah. Go ahead, Frank. I'll let you. You was
Yeah,
on a flow anyway.
no, that's fine. Absolutely, there will be. Okay, because already what I'm seeing is anything that becomes trendy or on vogue gets replicated to make profit. Okay, so my background is in compliance and risk, and enhanced due diligence, compliance functions, onboarding financial entities on behalf of foreign governments, and ensuring that they go through a robust, comprehensive screening process to manage legal, reputation, and financial risk. So absolutely, I'm looking at this sector already. There are people out there that are saying they're doing it. They're DeFi. It sounds trendy, and they're going to give the minimum amount, or not at all. Use it to defraud DeFi users. Rugs are prevalent. There's going to absolutely have to be a diligent, robust screening process to make sure that people that we give grants to build on our chain, people, at the end of the day, a blockchain's permissionless, but people that we give the grants to and invite on to build out our own layer one, we'll absolutely have to do that sort of screening. But yeah, I'm seeing it already. You're going to see a lot of DeFi projects saying that they're that when they're actually just paying lip service to it rather than trying to tackle these issues. And we will absolutely have to apply some level of due diligence to ensure that that doesn't happen, especially if we're partnered with them or they're building under grants.
Yeah, that definitely makes sense. Is there or kind of like a process to vet those projects, like requiring audits, getting like KYC information down before they're allowed to launch their chain or at least receive a grant? I know that a lot of blockchains that are in the works right now see the issue that, okay, there's a lot of malicious activity in the space, a lot of rug pulls, and there's not a lot of accountability for that. And they're working on ways to integrate that accountability and that security within their blockchain for those projects launching. Is that I know you guys are big on security, like you just said, but what kind of does that process look like from like if I wanted to launch one of my projects on your guys' chain?
Well, first of all, you can't stop a project building on your chain, right? You can do it in the early days where we're building it. It's going through testnet. We're going to have a grant program. We want to build this community of projects that share the same vision to, really embed that culturally within our ecosystem. But I would argue that it's extremely difficult to monitor that at scale. Ultimately, that's where it comes. Go on, Ash.
Yeah, so there is an extra level of verification on the layer one blockchain. It will be to do with the block explorer. So obviously, as you come on and you verify a project, or you look to get your project verified on the Block Explorer, you have to go through like an additional compliance. That's where we would do the due diligence that that's aforementioned. That will effectively build up. But yeah, so to get a project, to list a project is technically permissionless. But to verify a project on the Block Explorer, that's where the due diligence will come in.
Gotcha. Now that makes sense, and kind of getting that listed on the Block Explorer or verified on the Block Explorer, that would be like the stamp of approval from you guys saying this
Yeah,
is the project. Like we've done the due diligence on this group. That makes sense.
absolutely.
That makes sense. I like it. And as far as launching on or creating your own L1, is there a reason why you didn't go with a layer 2 versus a layer 1? Like, what are the advantages there and maybe some disadvantages?
So like, having a layer one is obviously the key advantage. So our layer one's EVM compatible. It's built on Hyperledger Bezu. It's proof of stake authority. We've got 30 master nodes, 306 validator nodes, and the setup really is quite traditional. We're not looking to try and reinvent the wheel with the latest sharding or different blockchain coding languages. The reason we're going for the EVM compatibility is that we do plan on bridging immediately into different chains. What that will allow us to do is, for example, the refi projects that are building on Polygon, the refi projects that are building on Ethereum or whatever. Oh, can you hear me?
Yep. Now we can.
Sorry, I had a call come in. Yeah, and it's basically so the EVM compatibility side of things is basically to allow projects to flow over, which is obviously easier for intake opposed to WASM or Rust or which we do plan on integrating. But yeah.
Gotcha. That makes sense. Definitely makes sense. Is there a disadvantage to not building on a layer 2 versus your layer 1?
No, look, to be honest, no, I honestly don't think there is.
Gotcha. Okay. Interesting. Just curious to hear, different perspectives, because I know a lot of people, like there's a reason why layer 2s are built out and there's a reason why layer 1s are built out. So curious to
Yeah.
hear different perspectives, because everybody seems to have different opinions on like, oh, this chain sucks or this chain is the best chain ever. Like I don't even touch these chains, and it's different for everybody, right? Like there's no one size fits all solution for people in this space. So definitely interesting to hear all the perspectives. But going off of building your own chain, getting liquidity on a new chain is often a very, very difficult task. At least sufficient liquidity to be able to do all the capabilities that you are, aspiring to do. Do you guys have a plan to attract all of that liquidity on the chain, or how is that going to look?
So it's a good point because a blockchain with no product is no blockchain, and a blockchain with no liquidity is not really a blockchain either. So we're paying great focus to that. We are conducting a Series A, which will build a war chest of liquidity. On the second side of it, we're in talks with partners that have carbon credits that could provide liquidity onto the platform. So there's two angles of liquidity there. And then obviously, user flow and user base is a massive proportion of the liquidity that we're forecasted to kind of acquire. So yeah, it's really it's the product that will generate and acquire the liquidity. If you look at like Luna, for example, at the top of the market, it had a product that could give you a yield on your stables. A lot of the stables exited out. A lot of the crypto exited out into stables at the high prices, and it absorbed that market. I see our model kind of similar, but obviously instead of UST, we have carbon credits as our standard farming token. So it's a different model, and it's kind of arguably poised at an even better time because the carbon taxes are going up next year. There's more industries being affected, and just the ESG sector alone is $5 trillion. So if we can capture a small part of that, by having a set of optimized tools that kind of allow businesses to save costs, then they'd be stupid not to use them.
Yeah, for sure. And let's dive a little bit deeper into how exactly those tools help businesses save costs. I know we briefly touched up on it, but I think there's a lot more to unpack there.
Yeah, okay. So, we're all familiar here with like Beefy Finance or other yield optimizers, yeah?
Yeah.
Okay, so treat the so when Kyoto Protocol delivers its layer one blockchain, the blockchain will be called the Kyoto blockchain. Kyoto Protocol.io will actually become the carbon credit product of the whole ecosystem. So Kyoto Protocol will be a mixture between a yield optimizer and a decentralized exchange, where the yield optimizer can basically take in liquidity cross chain and offer a staking reward. That staking reward's then funneled into a DAO, which we control. We invest into refi protocols or ESG based products that generate carbon. That carbon is then measured and brought on chain in the form of a synthetic carbon credit, and we distribute that back to liquidity providers. So, in a nutshell, businesses or individuals or businesses on chain can pledge liquidity and passively generate carbon credits. And they can do this with stable coins, or they could do this with single side staking Kyoto when we have the layer one, or single side staking Kyoto alternative cryptocurrencies. So that's kind of it in a nutshell. But uh, from that point, as soon as we integrate carbon credits, you can then have decentralized leveraged carbon credit trading, where users that own carbon credits in a synthetic form can provide liquidity against people betting against the market price, because the market price is fed via oracles. So, the product class that we could build out with carbon credits is genuinely quite exciting. And it actually solves a massive issue for companies which are arguably trading in some of the worst conditions in modern history. Inflation's high, bills are high, costs are high. Can they really pass the carbon tax onto the user base? It's to be decided. So at least we can provide an opportunity for businesses to assess their model slightly different and potentially have a competitive edge over their competitors that will be passing the carbon tax cost on.
Yeah, I would just like to add to that. If Ash has given you a good overview of like the decentralized apps within our ecosystem, but really what our value proposition is, I'm sure everybody in the conversation understands how you can, stake one asset and get a passive return of another, whether that be carbon credits or USDC, BUSD, or a native token of the application that you're using. Where I think we stand apart is we've done a lot of we've discussed already about why it's important about bringing synthetic carbon credits on chain. The legacy issues with the carbon credit market right now is that it's extremely outdated, very cumbersome, and it's very time consuming and difficult to actually buy a carbon credit. Now, by doing this on chain, they become accessible. Now, very, very soon, you're going to see Web 2 or in real life, or major corporations, airlines, Delta Airlines or Emirates or whatever airline it is, or the shipping industry or logistics or construction. Concrete is the biggest draw upon construction in terms of carbon footprint. So all of these industries are going to have to offset. And they're going to do it very soon through governments implementing this carbon tax. Okay. So what Ash briefly touched on is, if we look at the shipping industry, and we use this as an example all the time because we're currently modeling out a solution that's custom to that industry. But they're very, very soon there's going to be a carbon tax of £36,000 per one way on a transit. And so it's 72,000 there and back. Now, as a bit, and this comes in from as early as next October, okay, just before our layer one is ready, and we're looking to be primed to take advantage of this. But currently, as a business, take the 72 against every shipping container on my ship, my boat, and pass those costs to you, which makes me more expensive against my competitor. Or I can take the tax that I need to pay, let's say it's 10 million, and I can give it to an entity or an ESG fund that will take the money and plant trees, and I won't see any return on that. Much better is to use decentralized finance or regenerative finance to fix this issue. So we can essentially take that 10 million as liquidity, put it within a decentralized application, lock that for 1, 3, or 5 years, and then you earn passively carbon credits to offset yourself. So that they're now offsetting their position for their business for little to no cost using decentralized finance. And at the end of that term, they get that money returned back to them. So that's the value proposition that Kyoto Protocol brings to real world businesses or Web 2. Okay, so that's really what we're offering and why it's, we're getting incredible feedback. Never mind the fact that you can have people come on chain and buy a carbon credit and burn a carbon credit or stake carbon credits or, all of those great functionalities of decentralized finance can be utilized and harnessed for the benefit of this problem that's very, very soon going to be huge for all companies. And we think we're, front runners for that. I think with our blockchain, with a lot of like-minded people giving them support to build on chain, having synthetic carbon credits and using this to help companies sets us apart and primes us for an industry that's about to boom.
Gotcha. Yeah, that's a lot. I mean, that's super awesome. I think that you guys have a really, really solid plan laid out. And speaking of a plan, I know you guys, or it sounds like if a business is looking to get those carbon credits, it would be essentially like a no-brainer to use this solution. But what's your plan on getting in front of businesses that would actually want to utilize something like this?
Well, we're already in front of businesses, this is the thing, it's these problems exist because there's, corporations or any business, wherever they are in the world are aware of this problem. They're already thinking, oh, okay, I'm going to have to pay 5 million next year. I really should get looking at this ESG focused, this tax, this carbon tax, and how am I going to pay it? And they're busy, right? So they're already thinking about it. Having a conversation with them is easy. We're in conversations for shipping, large construction projects here in the UK, airlines, you name it. We're talking to them now. Rewind back to what I just said. What are the three options? Be more expensive, lose the money, or offset for little to no cost and get the money back. It's not a hard pitch for us. It's ensuring that we have the right tool set available at the right time with the right clients. And that's really what we're doing now. We had a choice as a team to put off building in the worst market in 2 years. And we didn't. We chose to build anyway. The reason we did that is because we know that this is coming as early as next October. Our layer 1 blockchain will be ready just in time for when this starts to go live. So I don't think it's going to be incredibly difficult to get companies to, yes, there might be some that struggle with the transition from Web 2 to Web 3. We know that. We're all, essentially in DeFi, we're all early adopters on this AMA. But, to tackle that, we have like a prime brokerage set up that we can take these companies in. They can pledge the money that they need to in fiat. We can do the conversion and we can manage the process for them. Or they can just buy carbon credits from us, So we're taking the whole process and the onboarding from beginning through to end and making sure that it's accessible, because we all know the issues that we have with people coming into crypto. One, DeFi even further, try telling somebody, yeah, you have to go on pancake swap, that it makes their brain smoother and they give up. So we're not, that's the challenge we face. The product is great, the product's timed perfectly, but it's the barrier to entry that DeFi, refi, and crypto presents. But we believe we've got the right tools to counter that.
Yeah, and I think even just being aware of that problem of that barrier to entry and working on actively solving that is, it already speaks volumes to kind of what you guys are working towards, and your mindset towards achieving that. So I think that's super good and super important to note. And I've got a couple more questions before we can move into some of the community questions. And I guess the main topic I wanted to go to now would be where you guys are at now with your token that you have launched on the Binance Smart Chain, and going the way of a rebase token for distributing the supply. We got a question from Ewick in chat. He says, with the high APR rebasing protocol, there are always concerns of inflation, quote unquote, weighing down on the protocol, especially over time. Can you explain why you chose to go this route and what your team will be doing to mitigate the impact of inflation as much as possible?
Yeah, I mean, look, we've had this conversation at length with our own community. Okay, why we chose the rebase as we call it the genesis phase of the project. We believe that it is the fairest way to use it as a distribution mechanic for layer one tokens. So when you look at the traditional route to market, we would have our layer one and we'd have 3.25 billion tokens, and we'd have to do seed rounds, private sales, list on exchanges, first exchange, second exchange, then you'll see the price appreciation. What we've chosen to do is take a very, very small amount of initial supply, 325,000 tokens, and sell 49% in our fair launch, which was $2.38 million that we sold out on BSC. Now, if you look at the rebase, simply as that, yes, we know that the price is going to go down, because when we launched, there was 325,000 tokens, and when we finish, even with the burn, there's going to be about 2.2 billion. So, what we're looking at as a company, if you like, is market cap. So when we migrate, the market cap, Ash, is it about 600 million? Is it?
500 million is roughly the target market
With the
cap.
burn tokens out of circulation.
Yes, yeah.
Yeah. So we're looking at market cap. So when we did the valuation for the raise, we did a very conservative estimate of 25 cents per token at the end. Now, if you bought in at fair launch and you held your tokens right to the end of this period, the 12 months genesis phase, you'd still get a 172x on your tokens at 25 cents. So we're looking at this as a team that we're not going to, we've got that price in mind before migration. There's the opportunity that we can migrate early. The layer one's going to be finished way ahead of schedule. What we're trying to get people to understand is, we're aware that the price is going to go down because the tokens double every month. So with increased supply, the price will come down. We will protect prices and price points along the way. We have just launched our node sales. We're just going through our raise. We've made significant strides with that this week. All of the proceeds from node sales will go through the chart. So, we're aware of how people are seeing this, and it's because they take the viewpoint that we're a rebase with no utility, in my opinion. So, we're aware of the concerns of the community with this. We've been very, very open about that fact. While the price of the token will go down, the market cap will appreciate. And with that, you'll have more tokens when we migrate, and you'll make the profit of your money. Now, there's going to be people that want to get out. and make a profit that can't see that or share that vision. We get that. We've seen that recently. We saw it last night, actually. Somebody came out. But really, we've been very transparent about this the whole way through. We're the first rebase with real world utility. We've just described that. We've thought it out. We're business people first and foremost. I believe we will be the first to migrate to a layer one and actually be probably deemed the first successful rebase project, because we will protect the investment, we'll move it over and migrate. The utility will put to use. The tokens that you've accumulated will have value, and they will be a key component of what we've built. So, that's how we view it. We're looking at it as a long-term project. We're aware of the rebase. We're watching it closely. Yes, the price has come down, but we're going to manage that price with the finances available to us outside of the rebase. We've been very clear about that too, and we will migrate successfully. And that's the difference between us and any other project, is that we have this long-term plan. We're trying to get people to, buy into it, to share our vision and migrate. And that's the key difference with the rebase. It's only a distribution mechanic. We have real world utility, and you're not going to get trapped with tokens that aren't worth anything, because we've already made significant strides in what we're building. And everything that we're building is to ensure utility of that token and the value. Ash and one of our advisors are already looking into T1 exchange listings. It's all about the value of Kyoto token. And, the rebase is only a small part of what we offer.
Got it. No, that definitely makes sense. And I think that, like you said, with actually providing value and solving real world problems, that you might actually be the first successful rebase token. And I think that that's another key factor to look at, is what problem are you actually solving, and why does the DeFi space or the crypto space need this token and this project? And I think that you guys have that answered, and most, if not almost all other rebase tokens can't say that.
Yeah, I agree with that, and that comes about because, we had the concept of Kyoto before we got into, DeFi and rebases. And we were thinking, look, it's innovative to use it in this way and to share token, use it as a distribution mechanic. But what does it allow? It allows people to make a small investment today, hold it for 11 months, and migrate across to our layer one for a small upfront investment, still get a great return on your money at the end, and have a large part of this ecosystem that we're trying to map out and build and bring in, use Web3 to solve huge Web2 problems. And, sometimes it's very, very hard to cut through what we're seeing, because we're DeFi, it's niche community. It's, people are just looking at it and coming in for double my money, come out, yield farm, next project. We know that. We're trying to battle this, but the rebase is simply for you to make a small investment and take your tokens across. And, that's how we're different. And I think people will be able to take advantage of a small investment and take a huge bag of tokens.
Gotcha. Yeah, it definitely makes sense. And then I guess we can move on to some community questions. We got AJB. He's got a couple really good questions. His first one is, are you just trying to capitalize on subsidies and grant work, or government subsidies and grant work?
Which ones exactly? What, in terms of carbon credits?
Maybe he can clarify that. But
well,
yes.
I'll answer it anyway. No, because we're not trying to get any subsidies or grants. We had a grant from NEAR to build a carbon credit marketplace on their chain. That's the only grant that we currently have received. In terms of government subsidies for carbon taxes, absolutely not. We haven't even researched it as a team, if that's what he is implying. We are, crypto enthusiasts first and foremost, we've taken a real world problem and used DeFi to solve it. So that's really our key motivation, and I think we've got it nailed. If there are subsidies and we can apply for them, let us know, because I probably would, but it's not our main focus or priority.
Gotcha. That makes sense. And his other he's got a few questions actually. One of his other questions is if I give you $10 million, what is the guarantee that I get my money back? How long will that take? And then also these are credits and tax laws changes. So what is in effect this year might not be true 1 year from now. How do you balance that out?
It's too broad to answer now. You know, it would take into consideration many things. It would take into consideration, we'd have to sit down and map out what are your carbon emission targets or your offset targets? Where are you based? What compliance standard carbon credit do you need? What is the cost of it at this specific time? How long, when do you have to pay the tax? You know, we'd have to consider all of these things. You know, it's far too early to tell. There's, like Ash said, there's voluntary and compliance standard. You know, if you're based in the US or based in Europe, you know, what you need to offset will be different. And, you know, how many tokens can you buy for your 10 million? What is the standard return? You know, we're already looking at starting with about 3 carbon credits within our own DeFi applications or marketplace. You know, Ash, would you want to give a vague return on how you would work that? Is he on?
Yeah. Sorry, yeah. So, look, so as a user or a business, as you come onto like the carbon credit marketplace, you'll be able to see the rates and the risks. So, you know, if it's a stable coin and you're not looking for any downside risk, there'd be a fixed return. But that all coincides with exactly what Frank said. You know, what carbon class you're looking for, the amount you're looking to offset. So yeah, you covered it quite well there, Frank.
And I would also say this, you know, for that level, so we have 3 different sectors within our decks, right? One is swaps, like any swap that you're used to, sushi, pancake, spooky. Then we have carbon farm, which is what we could go on, put your stables in, put Kyoto in when we're on our own layer 1 with all of the tokens migrated, and receive carbon credits in return. The other piece of this puzzle, which we've sort of mapped out, and if you like is proprietary, is we haven't named it, but that would be for Web2 companies where they become put their money, and they're there to put in larger sums to meet offset obligations. And that return will vary based on, Ash says, if it's stable only, stable Kyoto, you know, we'll try and, but it has to be sat down and mapped out with each individual, because it's too bespoke. It's not going to be a one size fits all.
Gotcha. Are you guys taking any steps today to make sure that for those potential changes in the future with how that works, that you will be in a position to be able to adapt to those changes?
Yeah, I think you know, when we initially set out the plan of Kite's protocol is very linear. It was in stages, sprints, and different plans. But you know, businesses do change and opportunities arise, and sometimes you need to pivot towards those opportunities. I feel like we've got a great board and we've got a great group of minds around us to make those decisions. So yeah, look, we're active and agile. We're all businessmen, and we've had to pivot businesses before. Not saying that we will, but if an opportunity arises, then you know, so be it. We have to do what's best for Kyoto.
Yeah, that makes sense. I think obviously we don't know exactly how the future is going to look, so it's can't give a clear and concise answer. But AJB asks some tough questions. He's got one more. It's yes. So you mentioned you are going to take some of the investors' money for projects. How is that cut, and then who determines where that money goes?
So in terms of like our Series A or capital raise, we will be forming a branch, an ESG investment fund is effectively what it is. That will be to onboard funds mainly to invest into refi protocols that are building on our blockchain. In terms of funds that or projects that we would invest in as Kyoto Capital, we're looking to take counsel from our Kyoto Council as long as other board decisions to make the right decision. Ultimately, each decision needs to be net positive to the business, with Kyoto holders in mind. We would look at, potentially voting mechanisms in the future, but that's to be decided.
Gotcha. No, that makes sense. See, we got a question from Brent, a crypto fan, in chat. He asks, from a long-term perspective, how does Kyoto Protocol plan to be the home of refi projects?
From a long-term perspective,
Yeah.
well, I would answer it this way. If you look at this space, it's very, very new, and it's an emerging sector. I've said this before on AMAs. I think whoever does it first and whoever does it best will, ultimately get first mover initiative. Yes, there's people that have done this and the OGs in the space, but they're building on other blockchains. I think done right, I think the longevity will come from the fact that this sector will grow in tandem with the layer one itself. So if we can get this, we're looking at having it finalized, obviously not with all of the projects built, but it could be released as early as, sort of not released and migrated, but finished around January. And then that should give us another 6 months to, bring the right refi projects on. We're looking at a grant program as part of our layer one. We're in discussions about that now to bring people interested in the space, and encouraging people to build. And I think that what we're doing with the gas and the tokenomics will, shows that we're taking this seriously and we're looking to be a key mover in this industry. I think the long-term success will come from that, from having the right vision, building it correctly, and having it built as the space looks to grow. Already now, if you look within Twitter, if you look within the space, I see Austin's in here tonight. We were on with him on Sunday. There's some great projects building and pioneering and using this technology for good. And I think that they've got a choice, right? They can build on any other chain. This can continue to be fragmented, or using a merger and acquisition strategy, you can consolidate. And I think that's how we'll be successful long term, is if we can bring like-minded people, incentivize them to build on our chain, show them and help incubate them, use our gas fees to further promote regenerative finance by getting a fund from within our own TX transactional hash on the blockchain, and further replanting trees or promoting biodiversity, whatever it may be. I think we're setting ourselves up by being the first and doing it at the right time, and that would be how I think we're going to be successful long term.
Gotcha. Yeah, definitely well thought out, and there's a lot of stuff obviously in the future, like we've touched up on, that you won't be able to see what's coming, but I think that being open-minded and helping other projects that have that shared vision and values as you guys, I think is really going to go a lot. Let's see.
And I think also, right, it's, if you're looking to come into this space, all right, you could argue, well, why build on Kyoto protocol or the Kyoto blockchain? I think the key consideration is going to be our marketplace, what we're doing with our partners, what we're looking to build outside of the rebase. But if once we start to sign up, we've already got a very credible partner to build on our layer one. It's not even built yet. I think I'm really excited for them to be involved. I just think that excuse me. I've lost my train of thought there now. I'm choking on. Yeah, I think. Yeah, it's gone. Sorry.
Oh, that's all good. It happens.
My eyes are watering. It's a bug.
You good?
Yeah. Yeah, that's not happened before. Sorry, what was I saying? What were we saying?
Are you talking about a partner building on your layer one?
Yeah, so we've already got the right partners building on us with the right incentives, and I think our marketplace is going to be what's going to draw people. Because if we can get to the point where our layer one is ready for migration and the marketplace is there, we've still got so much time to get these shipping companies involved, to have people ready to plug into this marketplace. You know, that already gives value to the Kyoto token because it becomes a key part of that ecosystem. So, you know, it's still incredibly early. You know, I think why would people build here is because they're probably going to see that the marketplace is going to grow and be successful and probably be a leader in bringing synthetic assets on chain and being able to harness DeFi to offset a wide variety of different industries, whether that be construction, whether that be shipping, whether it be, you know, airlines or aviation. I think that having that as a jewel in the crown, having these marketplaces and these carbon credits scattered and built out is really going to show value to people wanting to build on Kyoto. And that ultimately is going to build the long-term value. Sorry about that. I think I swallowed a mosquito or something.
No, that's all good. I like the answer for sure. Definitely makes sense. And so we got another question from Pi. He asks, "Can you talk a bit more about the nodes that you're planning on implementing?"
Yeah, so obviously our blockchain is ran on the Hyperledger Bezu consensus. We could have ran a smaller amount of nodes. The master nodes that we'll be running are obviously effectively the main thing running the blockchain. The validator nodes will relay to the master nodes. The master nodes and validator nodes are a distribution mechanism for tokens that are pledged to the ecosystem. Obviously, creating a more a better outlook for supply and demand. Will also be when the blockchain has enough TVL of its own, it will basically yield farm carbon credits through Kyoto Protocol itself, and the carbon credits that it yield farms will be distributed through the nodes too. So yeah, like it's traditional in terms of your typical node setup. People will be able to pledge tokens to validator nodes as a general user, and the master nodes will charge a 15% distribution royalty, and the validator nodes will charge a 10% distribution royalty. We do have a Medium article that kind of breaks down the rewards, the guaranteed Kyoto rewards, and that is basically depicted on our burn rate. So we're aiming to hit 30% burn before migration, and obviously that means that we have more rewards to give as we work up to our max supply, which is 3.25 billion.
Got it. Yeah. One of your team members wants to find a link to that Medium article and post it in the chat, that would be awesome. And then
I'll get on it right now.
Oh, perfect. Thanks. And the last question I'll kind of leave us on is, and each of you guys can answer this one. It's a little more subjective. What are you guys doing on a personal level that affects how you guys operate in creating Kyoto protocol, like from almost like a personal development standpoint on what you guys are doing to be continuously better and better every day, that would translate over into also your working relationships with people and your mindset and anything in between.
Well, Frank, as COO, I'll let you answer the difficult question first, and I'll follow on from your answer.
Yeah, thanks for that. What am I? Paraphrase? Can I paraphrase it? Are you asking me what I'm doing personally to ensure the success of Kyoto to be better every day, or just say it again, please? It was a pretty difficult question.
Yeah, yeah. Essentially, what are you doing on a personal level to improve yourself every single day that would then translate over to improving relationships with coworkers or your mindset on running Kyoto protocol or anything in between?
Wow. Okay, so Zach, that's the question. So, right, I come from an elite military background. I'll say that. I'm a Royal Marines Commando. I served for 6.5 years. I've kind of kept that mindset with me. 99.9% need not apply. It's a pretty big military unit in the UK. Um, I've taken that with me. I have those values. Integrity is big to me. I think Ash and Ken will say that I'm pretty open, I'm pretty honest, I'm pretty fair in terms of dealing with co-workers and people. I am driven to be the best in any endeavor I undertake. It's kind of in my DNA. Um, I read a lot. I exercise. I have some land that I'm looking to do, my own land that I'm doing regenerative projects and reforestation with, looking at. So I spend time there on my land and with nature. Helps me get a sense of stillness, and it helps me think better. And, those things combined, I believe, allow me to have the right perspective in which to deliver. But, look, I'm a serial entrepreneur. I work incredibly hard to make sure anything I do is successful. And that's what I bring, and that's what I will continue to do. And I think that whether it's flying somewhere to speak to investors, whether it's, doing AMAs every day with people like yourselves, or we do one every day with our own community, I think transparency, integrity, and trust are key. And that's kind of what I personally look to bring to the table.
That's a better answer than I could give. I'll add to Frank in terms of what I do myself. I'm a keen advocate of hikes. I like walking around woodlands. It was actually what inspired me initially to start Kyoto. I actually wanted to preserve an ancient bit of woodland that I like walking around. A fun fact: the UK only has 2% of its ancient woodland left, so we've absolutely decimated it. And inside that ancient woodland, it's got mycelia, which is obviously an interest of mine. But to better myself, I like to take myself out of the situation, try and look at it from a different perspective, and then come back in and kind of improve on it. Frank and I work quite well because we've got completely different characteristics, and it kind of complements each other well when we're looking for development. So yeah, that's kind of what I do. I like to go out and get a bit of a free thinking space, come back in, assess it, and try and improve on what I left off on.
That's a ninja test, by the way, that question. That is
Yeah.
ninja. Yeah, good one.
I appreciate that. What about you, Ken? Anything to add?
Me personally, I think that selling my truck and buying an electric car is the way I help.
You got
Gotcha.
an electric truck, Ken?
The wife and I have actually been talking about going electric. It's something that we've thought about for a while now, and I mean, we've seen gas prices decrease a little bit, but it's not something that's ever going to continue to decrease. So, there's things of that, that I've looked into, trying to go that route. I mean, driving a big dirty diesel isn't really needed now that I'm not doing the same things I was a year ago.
Gotcha. Yeah, I also drive an electric vehicle, so I'm right there with you.
Yeah,
Strong.
especially nowadays. I mean, nowadays when you look into them, I mean, when they first started with them, you only got, 100 miles or so. But I mean, now with the electric cars they have, you still have a 400-mile radius. So, I mean, it's not like you're really giving up that much to change over.
Yeah, yeah, definitely. No, I haven't had any issues with it so far as like going long distances. I've done one road trip with it, and I only had to stop once at a charging port, but no, it worked well. Definitely something that I think is very feasible for most people. But yeah, um, with that being said, like I appreciate that those answers. I know it's a very tough and personal question, but I think that it's very important to understand and focus on the character that you have to build to be able to operate something at such a large scale. And that's a lot of things. A lot of people just overlook that part of it. They only look at just the business side of things, just that plan, not necessarily the people behind it and their mindsets for it and what they're doing to improve. And I think that it's always super important to understand that aspect as well. So I appreciate the answers, guys.
Yeah, definitely. I mean, we've always been completely open and honest with the community. I mean, like Frank stated, we've done daily AMAs with the community I mean, I remember at the beginning we had what, 5 people in there.
One.
And I mean, yeah, really Vito and then Pug came along a little bit later. I mean, but that was the thing for us. I mean, we would still run them even if we didn't really get that many people in, and we'd run it for the whatever time it ended up taking. Sometimes we would just all be on there, talking over things, personal things, how our day's going, market talk, those kinds of things. But we've always made a very good effort to include the community into things. We take community suggestions to heart. A decent amount of community suggestions have actually been implemented as well. So, there's a lot of different things that we do. One of the biggest things with that is to show people that, we are people too. I think that's one of the things that's really lost in the crypto space and a lot of projects is that people like to hide behind the screen and not really open up, just kind of treat it 100% business. And there's so much more to it to make something successful. It's a lot more than just business concepts, practices, things like that. I mean, you have to have the community behind you, and for people to really feel any sense of real trust or transparency, they have to feel that they know you as a person as well. So that's something that we've always focused on.
Yeah, yeah, I definitely agree there, and hence why I ask those types of questions. I usually try to slip in a couple of those types of questions just to see a little bit more on where the people behind the avatars are coming from. But definitely like those answers. But yeah, is there anything else that we haven't gotten to touch up on yet that you'd like to mention real quick?
One thing I did want to go over, I did see a question in the AMA question chat asking about the $400,000 giveaway. So the $400,000 giveaway started on the 7th. It will run until the 7th of September. And it is a buy and hold competition. So even those that are not buying are still entered from holding. You do have to fill out the Google form, which we have in the announcements. But the way that that works is first prize will get a master node, which is a $350,000 value. Second prize will get a validator node, which is a $35,000 value. And then third place is split into 3 winners of $5,000 BUSD each. And the way that it actually works is we actually have software that is running this competition. So the tokens that you already hold are worth half of a ticket. Any newly purchased Kyoto during that time frame is worth 1 ticket. And if you transfer or you sell during the competition, the software will actually disqualify you itself. And I actually have a picture that I can show of that. It will actually calculate due to your token holdings, and it also calculates the 1 ticket per new buy, per each Kyoto for a new buy. And it will actually show through the software exactly how many tickets you have. And that will add at the end of the month for your probability of winning. And then it will be 100% random through a random number generator.
Gotcha. 400 grand up for grabs. That's I think that's the biggest giveaway by a long shot that I've seen in DeFi. That's
Yeah, it's
awesome.
definitely a big one. So yeah, I mean, all it is really is buy and hold. Like I said, those that already hold are getting half of a ticket for everything that's already held, and then if they top up their bag during, they're going to get a full ticket for every one Kyoto that they purchase during, and then the tickets will automatically accumulate that way.
Got it. No, I like it. Interesting. Yeah. Well, hey guys, I appreciate you all taking the time to speak. I know your guys' time is very, very valuable, and you guys have a lot going on. So taking time out of your busy day really means a lot to me, and especially for everybody in the audience. We had, I think, almost 60 of you guys tuning in today, which is absolutely mind-boggling to me. I think it amazes me that 60 people took time out of their day to listen to what we had to say, and that really means the world to me. So I appreciate it so much.
Zach,
Thank you.
it's been a pleasure. It's been really nice coming on. I've enjoyed it.
Yeah, enjoyed having you guys, and I look forward to seeing the growth that you guys have and all the new stuff that you have in store.
Yeah,
Brilliant.
thank you.
Yeah, we look
Definitely.
forward to sharing it.
Thanks for your time. I appreciate it.
Thank you. Take care.
Likewise, yeah, have a good one, guys.
Keep those hard questions.
Oh, yeah.